Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris.
Hey, thanks for having me, Jim.
Chris, the stock market's very bumpy the last couple of weeks. What's the story there?
Yeah, we've definitely had a wild ride in equities. The Fed's come out a few times. Each time the Fed comes out and says anything, the stock market has had a huge sell-off that day. We've got obviously concerns of rates going up. We've got concerns of the Fed starting to liquidate their balance sheet, which, you know, big players, if we know rates are going up, that is a game changer. That's a lot of big funds and money managers will be recalibrating their portfolio to deal with a rising rate. And of course, a lot of people are going to want to front run the Fed, get out of their stocks before the Fed potentially drives the market lower. So that's, I think, really fueling a huge chunk. Most of this downward bias is just a lot of waves of selling as people kind of panic and want to start to liquidate. And all these things, typically, you know, near the end of a bull market in stocks, we do see rates start to go up. And it's you know, there's a lot of warning signs out here that I think we're in the very late stages. We are very close to, I think, very tough times in the stock market. In fact, you look at Vanguard, you look at what is the other one? Schroders. We've got these big banks are coming out expecting 3 to 4% returns from the stock market over the next 10 years. If these banks are saying they're expecting 3 to 4%, they're probably saying, well, we're expecting a huge bear market, and then it's going to have to recover, and there's going to be very low returns over the next 10 years. And I totally see that unfolding. So there's a lot of fear going forward. And during this stage is when there's great opportunities. Bear markets aren't just a bad thing. They actually open the doors to all kinds of opportunities. Late stage bull markets and bear markets, they have great ways that you can trade them. And, you know, precious metals is something that's just starting to come back to life right now.
Mm-hmm. So what's the story with gold and silver right now?
Well, gold and silver have been under tremendous pressure for the past year and change. Really just a really tough bet. They constantly have been trading sideways or lower, out of favor. But what happens with precious metals is they tend to come back to life right near the end of a bull market cycle for stocks. And we've been seeing gold, silver, and miners over the last couple of months trade sideways. We've seen increased volatility, meaning we're seeing them drop really big one day, rally a couple days, and drop again for a few days. And they've been kind of channeling sideways, creating what looks to be a high volatility bottom. And what's interesting is the stock market sold off this week in a big way, and the markets were down 1 to 2%, the indexes. And we saw gold, silver, and miners shoot through the roof. And they haven't had a disconnect this big in I don't know how long, very long time. We saw gold miners up 7% while the stock market was down 1 to 2%. Silver miners were up over 9% on the day. And all of them broke out of this basing formation that they had been creating on the charts. So this is a really good sign. This is like the first step towards a renewed uptrend for precious metals. All of the precious metals and miners have been in what you could call as a huge kind of multi-year bull flag, which points to a very big multi-month rally if this has legs behind it. So this is a big turning point. The fact that we're seeing the shift in rates for money flow, people are really dumping a lot of shares in the stock market. Fewer stocks are holding up. Actually, more stocks are going down. Yet the SP 500 was making all-time highs really just like 2.5 weeks ago. So that's a huge divergence, that the market is going up with a handful of big tech companies dragging the price up, masking what's really happening behind the scenes in terms of individual stocks in most sectors that have been going lower for the past year. So I like precious metals. They are really starting to become, I think, a leading sector going forward. I use this hot list. I call it the band hot list, the best asset now. And gold and silver miners have been at the bottom of that list for like the past year. And in only a few days, they have jumped over halfway up that list towards the top. And the top are the best assets you want to own right now. And so these are very, very strong patterns that are coming out of here. We're seeing precious metals come out of what was a very bearish stage. And when it goes from a bearish stage to a recovery or accumulation stage, we can see big moves. We're talking 50, 100% moves in these commodities and these stocks within a very short period of time, a few months. So precious metals, to me, I think are going to be one of the bigger plays here going into the first quarter of 2022.
Do you look at individual junior miners in this gold and silver rush?
I don't. I mean, gold and silver and miners have been out of favor for so long that I'm not that interested in those. I focus mostly on the ETFs themselves, but obviously there will be some incredible. If the ETFs are going to be moving, 50, 100%, the underlying juniors move hundreds, in some cases thousands of percent. So there's a huge opportunity in those, but you really only want to own them when the market is trending up. And we're still, you could argue, I mean, we're only one day into this new uptrend as you and I are talking about this, so it's still a little early to jump ship and get really committed into those very kind of lucrative plays. We've seen big pops like this happen in the past, and they fizzle out within a few days, and then the stocks and gold, silver continue to make, lower lows and continue here. So I'm not totally sold. I'm getting excited about it. When they do break into a bull market and it's confirmed, I will be going to look at some of these individual plays for some, I call them golden rockets, type of stock picks, but it's still a little early in my book for me to jump into those plays.
What's going on with palladium and platinum?
Yeah, well, if we take a look at platinum here, platinum's had a really nice rebound. It has been doing much of the same thing that gold and silver have been doing, trading sideways for the last couple of months. And this week they've popped and they've started to break out. It looks like they're trying to put in a bottom, but they really still need to break. We need to see platinum break the highs back in from November. And it's still a long ways up from where we are. So again, silver and gold are in the same boat. They're from a very short term, they've popped, they've broken out, but this could very easily stall out over the next couple of days and roll over. And if we take a look over at palladium, it's done the same thing. So when you look at the chart from a longer term perspective, there's still very clear standout highs. And each of those highs is lower each time. And the lows are also lower each time. So it's channeling down, and something making a series of lower highs and lower lows is the definition of a downtrend. So all of them are still stuck within this big downtrend. But in the very short term trading, we're seeing a bit of life come back into these markets. But that's why I'm not too excited about it yet, because we do need to see a higher high first. That'll be the first step. And that could happen really within only a couple of days. The precious metals can move very quickly, and we could see platinum, palladium, gold, silver all pop and hit make some higher highs here within the next week or so. And that'll be a game changer. That'll be, hey, we are now, making higher highs, and a pullback here could be bought for potentially the next leg up. And that leg could be huge, a multi-month run.
We'll have more with Chris Vermeulen right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, what's going on with crude?
Yeah, crude oil's had a tremendous run. It was in a very bullish stage back in November until the Omicron hit and took the wind out of the sails, where countries were locking down and airlines were talking about, stopping again. So we saw a big drop in crude, but it has done one of those kind of V-shaped recoveries. It has turned around, it has ripped to the upside. And you and I had talked about this. This was back in October, November, before Omicron. That from a technical standpoint, we're probably going to see crude oil run all the way up to $88 or $89 a barrel. That's what the big picture chart. You look at the monthly chart, the weekly charts, that's where it's showing. And believe it or not, we have seen crude just muscle its way back up there. It hit pretty much $88 already this week, and that looks like the measured move. I mean, we're seeing big volume. We're seeing a big bout of intraday selling on crude, and I think this is just the start of the run for crude is kind of, I think, more or less over. It's a high-risk trade now that it's hit resistance, and the fact that it gapped up and has gapped down in the last 2 or 3 days is telling us that increased volatility is here, sellers are here, and you got to be aware that crude might, pull back or trade sideways here for a few weeks. And depending how it trades, we'll be able to see if it's a bullish pattern, if it's going to even push higher and try and target that $100 a barrel, or if it's going to break down and drop back down to somewhere around $76 or $72. So crude was a pretty interesting move going forward, but that move, I think, is pretty much over.
What's going on with natural gas?
Well, natural gas has been a real roller coaster. It has pretty much played out as we expected. We saw a major topping phase through September through November, and then it broke down from this multi-year cycle high, and from there it's formed a series of bear flags. And natural gas has this really interesting way of how it moves. If you're to look at the daily chart and look over from November to where we are now, it has dropped, and then it trades sideways in a narrow range for a few weeks, and then you see a really strong, I call it a hook. It looks just like a fish hook. It hooks straight up with a huge pop, only to reverse and crash for several days afterwards and drop, 20-30% very quickly. And we saw that hook and pop again just about a week ago. Natural gas had this huge move, ran straight up and hit resistance, and now it's given all that back, and it is in free fall mode again. And I still think it's got quite a bit of room to fall from where it is. It's been a really interesting chart to watch unfold, and I think there's still going to be lower prices going forward.
Utilities, are people fleeing to them because they're usually considered a safe or safer haven?
Yeah, we are seeing utilities. They're holding up pretty well. They have a nice bullish chart pattern. You and I are speaking today. They're one of the strongest sectors in the market right now, so definitely people looking for that boring conservative play that pays a dividend. So that's an important point, because we tend to see utilities do very well before a stock market corrects. And believe it or not, the utility ETF, the XLU, is right back up to the point where we had before the COVID crash. So I think utilities could potentially continue to move further forward and higher, but more or less, it's interesting that we're back up to the COVID levels. The last time we saw utilities outperform the market, which they are now, and at this level, there was some pretty doom and gloom news around the corner. The market had a huge sell-off, and I think we're getting close to something like that. The stock market feels very close to breaking down, and the way this market moves now is, there doesn't seem to be a whole lot of liquidity. When the selling starts, I think the robots kick in, and we just see these dramatic drops. You go back, 5-10 years, 1/3% or 0.5% a day in the stock market. The S&P 500 was a pretty good day. 1%er was a huge day. Well, we're getting 2 to 3% drops regularly in the stock market right now, and it just goes to show how big this volatility is. And when the market falls, it collapses very quickly, which is why a lot of people need to have stops in place, that if we ever have one of those flash crashes like we had in, I think it was 2010, market fell 9% from the previous day's closing to the low the next day, you need something to execute you out and protect you, because you never know how far the market could fall, and things could get ugly very quickly.
The U.S. dollar, what's happening there?
The U.S. dollar, we've been seeing a nice climb in the U.S. dollar since more or less June. And what I find with the U.S. dollar, when there's fear in the market, we tend to see the U.S. dollar do fairly well. And when we had the COVID crash, we saw the U.S. dollar spike huge. And if you go back in time, the U.S. dollar tends to climb and start to rally before the stock market usually goes into a deeper correction. And we've seen a very strong move up from the June lows. Stock market is looking very toppy here, and I think we're seeing a lot of money move to cash, move to the U.S. dollar, trying to be defensive and protective. They don't know where to go. They're worried about the downside risk right now is way bigger, I think, than the upside potential for equities, and money is, I think, liquidating and starting to prepare for that. So I think there's good potential for the dollar to keep moving up. It's had a little shakeout over the last week, but overall, if rates are going to go up, that's usually going to be a strong sign for the underlying currency, and I think that's going to continue to muscle the dollar up going forward, and be an opportunity. Like there's an ETF to trade the U.S. dollar, like UUP. I think there's leveraged versions as well, because currencies don't move very big percentage swings very quickly, so leverage works with those a little better. But overall, I mean, I think there's going to be a point here where cash is going to be king, and potentially precious metals and miners could be second best play there for a short period of time.
What do you see happening with interest rates?
I think we're going to see interest rates continue to try to move higher. Depending on what happens with the stock market, we could, if we were to see a huge correction in the stock market, we could actually see, I think it was in 2018, they were talking about doing rates, a bunch of different things. Then the stock market corrected 20%, and everything the Fed had talked about, trimming their balance sheet, raising rates, all that just kind of vanished off the table. So really, the Fed says what they want to do. They've got it mapped out. Everybody's trying to front run it and get ready for rising rates and things. But if the stock market does drop and wash out with another 8 or 10, 15% drop from here, or potentially more, I think it could totally change what's going on with interest rates. I think things might have a halt, but the inflation we're seeing is pretty wild. I've never seen anything like this in my age. So this is pretty crazy to see the prices dramatically jump, 20, 30, 100% in some products and services and just, materials and stuff. It's actually a real eye-opening experience. I can only imagine what it must have been back like in the 80s with 14, 17% mortgages. So it's going to be interesting, but I think what happens to the rates is going to really depend on what the stock market does going forward here.
Commodities, lumber really catching my eye. It's doing what it did last year, making a dramatic hike. Is that going to last long?
I think it's going to fizzle out. I mean, typically that's not a commodity we've seen like a rally like that before, and I think we're seeing just kind of a bounce, another rally. Everyone wants to play it again, but based on the monthly chart of lumber at this point, it looks like it's hit resistance. It looks like it's starting to top and reverse to the downside, and I think it will fizzle out eventually and come right back down to that $500, $600 mark. But right now, I mean, it's been on a tear on the upside. I mean, people are still buying homes at record high prices. Rents are record high. It's just a feeding frenzy. Everybody wants to build homes and do renovations, and so the demand is up, and it's just being driven higher. And I think this is just a bubble. It's kind of like the second bubble for it, and I think it will fizzle out.
Mm-hmm. The Bank of Russia is making noises about banning cryptocurrencies. Any thought on that?
I'm not a huge follower of the cryptocurrency space, really. I know, there's different countries banning cryptos, and I think it might continue to grow with more countries doing it, and that might put a little bit of pressure on them. But that's not my field. But obviously, there's a lot of people who can kind of skirt around taxes and deals with cryptos, and some countries I just don't want to put up with it, and that's one way to slow it down at least, or put a stop to it in their region.
Mm-hmm. I mean, China officially banned cryptocurrencies and unofficially encouraged it. Would Russia be doing the same kind of officially we're against it, but unofficially go ahead, bud, or comrade?
Yeah, it could be. I mean, Yeah, we'll see how that unfolds. I mean, I don't know how easy it is to track crypto. How do you know if somebody in your country, a citizen has it? That's not my space, but I thought they're supposed to be super. No one knows about who holds it and stuff. So I don't know how you can totally ban it without, how people will know about it. So,
Chris, so overall, what's your position on things?
Well, overall, I mean, you look at the stock market, I feel like most of the upside is done. There's a really interesting scenario actually unfolding in the bond market. If you were to go back and look at like the 2008, 2009, how bonds popped and had a huge rally and then traded sideways. If you were to overlay that chart with what we've seen with the bond pop and fizzle that we saw from the COVID crash and stretch them out, they're almost identical chart patterns, which is interesting because the last time this happened, we saw two major things happen. One of them was precious metals went absolutely ballistic. That was the start of a huge run. And the other thing that happened was the stock market had cleansed itself, and the stock market started a new bull market as well. So this market to me is at this huge turning point. Do we see the stock market roll over and have a much deeper correction that turns into a bear market? Or do we see the stock market eventually shake things up here, turn around, and go into this euphoric, massive rally at a much steeper trajectory to the upside trajectory, and see precious metals go up as well, and the stock market climbs this huge wall of worry. I mean, we've already got this wall of worry, but if it started to go higher, it would be a much bigger wall of worry, and the market loves to rally when everyone is scared to get into it. It's just the way that it goes. So it's going to be very interesting. I think right now we have liquidated our positions as short-term traders, and we are waiting over the next week or two to see what this market is going to do, because the Russell 2000 broke down yesterday. It's bouncing back to try and regain it today. But if the Russell 2000 breaks down, that to me is a leading indicator that we're starting a much deeper correction in the stock market. The risk-on small-cap stocks tend to lead major moves, new trends to the upside or the downside, and at this point they're pointing to lower prices.
Chris, thank you so much for chatting with us.
Hey, always a pleasure, Jim. Thanks for having me on the show.
My guest has been Chris Vermeulen from thetechnicaltraders.com. If you have any questions for Chris, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.